So welcome to this session on unlocking the investment opportunity in nature-based solutions and projects in Africa. I want to mention that what we have today seeks to kind of highlight the potential of nature-based solutions and projects in Africa. And we have organized this panel, and what I want to say is that, as you all know, nature is critical for Africa's resilience. And so what we are doing today is we are going to dive into this topic of nature finance and more importantly, cover its transformative potential across the continent. You all understand and know that we face unprecedented environmental challenges, and therefore the need for sustainable investment strategies has never been more urgent as it is now. And so we will explore how nature-based solutions can not only address the pressing challenges that we have today, but also create economic value. And so today we are fortunate to have a distinguished panel of experts with us. We have Adrian Mill from Lion Rouge. Please come to the stage. He's going to share perspectives on investment barriers and private investment opportunities in nature-based projects. We have Paul Ouma from Cross-Boundary, who will discuss high potential sectors for nature-based solutions. Then we have Annette Garoza from 1MTN. Please come to the stage. She will also discuss some of the projects that they are involved in and the intersection between carbon and nature-based solutions. And then we have academia, Michael Musgrave from African Leadership University, who will discuss or highlight to us the importance of education, and Nicola Ranger from the University of Oxford, who is going to present to us the alignment between global climate and biodiversity goals, as well as international policy frameworks. So to start with, this presentation will be in two parts. We will have the first part by Adrian, who will make a brief presentation of his project. This will be followed by Annette, and then we will go into the panel discussion. So could we have Adrian's slides put up, please? Yes, please go ahead.
Should I come there, or do I do it here?
Wherever you're comfortable, even here is fine.
Sure, yeah, all right, yeah, I'll stand up. My name's Adrian Mill. I'm the Managing Director of ESS, Environmental and Social Sustainability, and I'm also the Managing Director and co-founder of Lion Rouge. Lion Rouge is a carbon and biodiversity project developer, and our flagship project's in Senegal. It's called the Grand Makiyop Conservation Project. We are a project developer focused on carbon and biodiversity. And we have a team that's truly experienced in ESG, conservation, and ensuring gender and climate smart growth projects implemented in an African setting. Myself, I'm in Senegal for 14 years, 25 years of experience in ESG. My business partner and co-founder, Christophe Dering, his father had constructed a park in Senegal. He is a South African conservation-educated specialist. It's a dream team, because having someone with ESG and conservation developing such a project is very rare. In fact, I'd go to say we're the only ones who have that kind of background with a capitalist sort of mentality on how to bring that carbon finance and eventually others to benefit communities and the planet. So we have a pipeline of projects. This is the first one, but this is where we focus a lot of our time and effort. And I'll tell you a bit more about it. What's the problem? I think we hear all the time really negative news about Africa, and certainly West Africa has its share of security problems. But Senegal is a bit of a success story. It's actually very stable and growing very well. So the problem with success is that comes with a price, and that is high levels of agriculture and urbanization. And you can see on the screen here the difference between the late 80s and early 2020s. where we see already, maybe you can't see it so well there, but you can see massive chunks of a protected area in Senegal. 2 protected areas are being lost. And it's obviously continued since then. So that's a problem. Another problem, we only have 1 elephant left in Senegal and nowhere near where this is, okay? In the southeast of the country. This is in the middle of the country. So that's a problem. Elephants by themselves can't reproduce, if I have to state things very bluntly. And this is a bull, so even less likely. Very sad. 50 lions left. West Africa has a number of big 5 species and major fauna species which are endemic to West Africa, and we're seeing them disappear. We're definitely within the dying throes of West African species if someone doesn't take action, like us. So the solution is a project like us. 35,000 hectares of protected land within the area with a view to increase the size over time and with the agreement and support of communities. We're restoring those. We say big 5 because that's something that people want to go and see in their life. It's like a bucket list thing. So big 5's elephant, lion, buffalo, rhino, and leopard. But there's lots of other species like the giant derby eland and others, which we also work to protect, and various other species of animals and plants. The beautiful thing about Senegal is it's stable. Again, West Africa has much security issues in the Sahel, which is where, coincidentally, many of our animal species that are threatened live. And so this would create a nursery, if you like, to repopulate those areas, and certainly other parts of Senegal where we've seen poaching and management, lack of management have impact on those populations. And there's going to be a big increase to tourism because of it. So there's a huge economic gain for Senegal as a country and the region. The most important thing to take away from this is it's really close. If you want to go to South Africa, and apologies to the South Africans and East Africans in the room, but it is very far away from Western capitals. Whereas Senegal is nice and close. 5.5 hours from here, you could get an EasyJet, right? Like that's the level we're talking about here. And the park is, when they finish a autoroute, will be a couple of hours away from the airport. So we're talking something that you could go and get there comfortably in a day with your kids. So very interesting. But most importantly, and I can't stress this enough, and I'll talk about it during the thing, but I'm going to say it now, there's all well and good having a carbon project. It's all well and good having a biodiversity project, but if you do not have a business, close the book, throw it away. Because right now, the problem is you're competing against business. And business will always win because money wins. So it needs to be profitable and it needs to work. So this is what we've done. We've created a project which, specifically in a West African Senegalese setting, it will make money. Okay? And we've done that in a way where we share the benefit directly with communities, not just in the big way of, oh, we're doing some community development and so forth, but in a way that ensures that they get their part in their pockets. Because the one thing speaking as a future Senegalese person, I've been there 14 years, I'm waiting for the president to sign a decree that makes me Senegalese, but also not speaking on behalf of the Africans, talking to Africans, and Senegalese especially, they don't want to be told what to do. They don't want to be told how to spend their money or where it needs to go. They want to spend it themselves. So we've got a very unique way of ensuring that that money goes to the family, each family, in a gender-smart way where we ensure that it goes to where possible, to the woman head of the family, so that money gets spent on education, health, and other things. So critically, there's 3 revenue streams, and one of those is the obvious one, but there will be biodiversity credits. There is a profitable tourism entity out of it, and this whole thing is scalable. I've talked a bit about the benefits to communities, but they are vast. Beyond just this shared profit concept, which I've already presented, we're helping them. A lot of them are living illegally in a protected forest, right? So that can't go on. And in an African context, if we allow people to go and knock down, I mean, if I go and put myself in Regent's Park tomorrow, I'll very quickly get the boot, okay? But in a Senegalese context, an African context, we have to find ways to ensure that there is a financial interest to move, so that we can protect these areas. But not just financial. People want land, but they want their land. They don't want government land. They want it in their name, so they can do what they want with it. Again, I'm not here to tell them what to do. That's their job. They know what they want to do, and that's how we can help them to be empowered. There's many other benefits that I won't go into now on the community side. On the biodiversity side, nature-based solutions. It doesn't get as more nature-based solution than putting in place a park to protect animals in an area which is massively degraded. It's as good as it gets. These are the highest quality creme de la creme credits from carbon perspective, and when we can disaggregate the biodiversity credits from a biodiversity credit perspective too. And look at the animals that, I mean, this is the who's smorgasbord of the animals people want to see in Africa. But it's more than that. It's hugely more than that. And it will allow researchers who can't access these areas because of security to be able to get in there and do so. I talked about a dream team, gender inclusive as well. Tracy herself wrote the updated the conservation strategy for the Kruger National Park, one of the massive projects in Africa. Okay, sorry, I'm too excited. One of the massive parks in Africa, and we are actively pursuing grants and obviously finance. And being an ESG specialist myself, this project is as de-risked as it gets, as it's possible to be for this kind of project. So we are looking for $3 million in finance. Had lots of conversations here. So many climate investors, but also other types of investors are very interested in this kind of project. Again, because I'm talking their language, make it the money. They want to see that, right? That's really the basis of any kind of financial deal. But because it's baked in with climate, communities, biodiversity, gender, you name it, this is a feel-good exercise that they're willing to take risks on, but it's been de-risked, so it's not even a big risk. Off-takers are obviously important as well. So we've identified lots of off-takers, and there's plenty of people who are interested in the highest quality credits that exist. So that's what they're very much after. So we don't have any problems there either, and we're pre-selling those. And so if there's anyone interested in that as well, we can talk about that. But we've done plenty of work to date. We just recently got our ESI terms of reference approved, and that $3 million is for studies. And then once we get to that point, we've pre-sold the credits, we then roll out the protection of the park area. I won't go into how the phasing too much, but it's got a very clear way of managing that is based on very well understood processes for conservation management. We have lots of very highly experienced conservation people involved in this, so it's and we're always looking for more partners. So and there's some of them on this now. So I'll leave it there because I don't want to go too long, and yeah, happy to talk more about it later. So thank you.
Thank you very much, Rihanna. Annette. Yeah.
Do you hear me? Yeah. Hi. Good afternoon. My name is Annette Garoza. I'm one of the co-founders of 1MTN. We are on a mission to restore 1 million hectares of degraded land in Africa. Maybe a little bit about my background is that I'm international climate lawyer. For 6 years, I had my own legal firm acting in Europe, and we were consulting governments and different climate project startups regarding the voluntary carbon market, emission trading systems, so, company sustainability journeys. And 2 years ago, I decided to do something very impactful, and we co-founded 1MTN in a mission to restore degraded land in Africa. With the expertise coming also from the corporate side, understanding what are the company needs, what kind of data points do they need to really make their investment decisions. We designed our model based on 3 Ps: people, planet, profit. So yeah, we designed our operations based on 3 Ps because fast enough we decided that and saw actually in the market that a lot of carbon credit projects are not sustainable in the long term, and we need to de-risk the investment. So how can we make it? We need to prove case to investors that there is a high profitability also, and not only that environment is benefiting, but also the investment side. So we are using a tool. Our tool is Bamboo. And bamboo is native for East Africa, so we are using a native or naturalized bamboo. Our model is quite holistic. We are taking a baseline of soil health, so a lot of measurements from our team side. We do intercropping in between the bamboo. Forestry plan is designed in a way that we also leave the native trees. We are also planting back in between the bamboos. The extinct, actually, wild fruit tree species in the region. We are highly monitoring the biodiversity. So we try to make a way how we can showcase that this project is really a high impact project. So how we can do that? By transparency. We can measure we can measure and showcase with the data what is the biodiversity level before we started and how it's actually changing along the way. It's not about only the carbon. The social economic benefits for a project is actually also a high importance. We are touching 8 SDGs. We have a foundational arm. 10% of our carbon revenue is going directly to the communities. And yes, our approach is that we are at the moment going after the private land. We are leasing the land. We are designing the operations. We are doing the full-scale public participation process. We are designing the benefit sharing with our community stakeholders in our project. And bamboo has a beauty. It's actually a sustainable timber. So meaning that to really take care on a sustainable manner, bamboo plantations, we need to employ a lot of people. In the region when we are acting, it's a high poverty region with high deforestation rates. So together with our operational team, we are training local communities, we are employing them. Already our 400-hectare project show a lot of impact in the region. And also together with the satellite and the monitoring teams, we can monitor the fire risks in a nearby area. So we see a lot of benefits along the way. Our project is designed per hectarage. So at the moment we have 400-hectare pilot. Everybody is welcome to come to Uganda. We are happy to showcase how it really is operational and what is the risk mitigation strategy for us. And now we are ready to scale. Oh, we also have slides, but yeah.
Yeah. Thank you very much. You know, it's great listening to you. I wish we had the slides before, but it's fine. You've been able to highlight this. So we have just around 35 minutes, and Adrian and Annette, you've had quite some time to explain, but I just want to take one question each for you two before I go or move on to the other panelists. So Adrian, as carbon project developer, but also as an advisor, for investors and corporates, what challenges do you see or do you believe investors face when entering the nature finance space? And how can these challenges be mitigated?
Yeah, I mean, obviously, I see things from a project developer side, but also as an ESG advisor, as you've mentioned. So watching other projects, it's very similar to what we find in many other sectors where there's a difficulty just to convince people that Africa is a safe place to invest. So that's straight away a really upfront one. But I keep telling people, Africa is an amazing place to live. I've lived there 14 years and intend to live for the rest of my life. You can dream it, you can do it. I think you can even do it more than even the American dream. The African dream is better. There's only one problem. And so it's very positive, but there's only one problem. There are lots of people who don't dream ESG, climate, gender, etc., smart dreams. Okay? So that's a problem. That right there is a problem. You're in competition with people who just want to get things done, make money dirty quick, no problem, right? And afterwards, we'll fix it later. So case in point, in Senegal, agriculture is slash and burn straight away. We get rid of these beautiful baobabs, which for thousands of years have been a sacred symbol for the communities there. And the new generation couldn't care less, right? Doesn't matter that their ancestors were buried inside them, okay? So it's sad that our ways can change. And I think some of the problems for not just investors, but it's also for those communities, and as things change, and as development scales in countries where we see successful growth, that change is actually a point of frustration because they don't see the green as a way to make money. So I think investors, there's obviously a problem for investors there in terms of the sovereign risk. There's a problem in terms of dealing with communities and what you could see there in terms of frustrations and quick bucks that need to be made. And then I think from a, just a purely green perspective, carbon markets have only existed for sort of 10 years, right? Like it's not 15 years max, and even then we're sort of starting to see the uptick. So it's very difficult for nature-based projects, which sit uneasily within just carbon, because obviously there's a biodiversity aspect, which I've mentioned as well. Again, be positive, huge upside, like that's great. We see that as a great thing. People are going to pay us twice for the same thing, right? Like fantastic. And that's good, because that money doesn't necessarily, we're developing carbon projects. It will be used to do more carbon projects. That's a great thing, right? And more biodiversity projects, more nature-based solutions. So I think those are the three issues we see.
And Annette, you are really smiling and nodding at that point. So just wondering your perspective on this.
Yeah, I totally agree. We are facing the same opportunities and the same challenges, high risk, high return, right? And in the end of the day, it is proving that Africa has a bankable project. And I'm also living proudly in Uganda. I really enjoy it. Happy Independence Day, if here is any Ugandan. And yeah, hi. And so regarding that, we really need to see how we are, showcasing our investment opportunity and how we are monitoring our risks. So data collection, transparency. If you are local boots on the ground, doing something on the land sector, then we really know these challenges. Digitalization is basically, I don't want to say non-existent, but that's a huge pain for all of us acting in this project. So once the digitalization in land sector starts to come in, then also that is easier. Also the local data collection for under the certain standards, we need to meet those standards. So that's also, pain on the, also opportunity on the second side. But I really feel that, that the interest is there and also capital is there. Now we need to close the gap.
Okay. So if we now move on to Paul from Cross Boundary, having listened to these presentations, and they have highlighted a number of challenges and of course the opportunity side. Which sectors in Africa, if you look at forestry, agriculture, water, which sectors show the most promise? Yep. And in addition to that, are there any project examples that you could share with us from your experience?
Yeah, sure, and thanks for that. And maybe just kind of to echo what Adrian and Annette mentioned is, this is a relatively kind of new asset class for a lot of investors. It is high risk, potentially kind of high reward, but you need the right stakeholders at the table, the right kind of sources of capital to kind of, actualize, what we're all kind of speaking about. If I look at what we've seen in the sector, maybe using kind of two examples, forestry is pretty prominent. There are a lot of stakeholders, whether it's, FSD, folks like Gatsby, who are trying to encourage investment into the space, but also trying to encourage from a community perspective, kind of the buy-in to, kind of sustain these assets, see the kind of commercial link for themselves as well. And that's, what Annette mentioned also through kind of agroforestry activities. So I think, even based on the activities that we've done in terms of supporting some of these transactions, engaging with investors, forestry is always kind of top of mind, but trying to figure out, how do you accelerate the commercial case for it, both domestically and also kind of international markets. Yeah. And that's through, kind of timber for infrastructure, timber for housing, getting the most value out of it in terms of FSC certification. So I think that's kind of one solid angle. But it's not, I don't only think like if capital is available, like it will be solved, right? Because there's a lot of kind of downstream and upstream work that needs to be done. Access to markets, educating the community about kind of the value that they can get for it, and also getting their buy-in in terms of intercropping as well. So I think forestry is kind of one angle. And one good example is, the work we did with new forests in Tanzania, Kenya, and Uganda in terms of how they were raising capital. And if you look at the nature of the capital they received, it was kind of across the capital stack, blended finance, kind of commercial capital. The blended finance component helps them kind of accelerate the engagement with the community, provide seedlings for intercropping, but also other kind of agriculture activities, whether it's kind of beekeeping, livestock, you name it. So just making sure it's not new to the community, but they also have buy-in. I think the other point outside of forestry is also, agriculture. And I know some of these models have been seen before, but whether it's solar irrigation in some of these communities, sustainable aquaculture as well, for some of the water bodies as well. So there are opportunities. I do firmly believe it's kind of a long-term play, and just that collaboration across development partners, financiers, operators will kind of make a dent in kind of what we're trying to achieve.
And looking at the deals you've covered so far, you've had so far, what are some of the main lessons?
I think the big thing is, if say you're going to raise capital in 6 months, probably double or triple that, to be frank. And that's what I'm saying. It's a new asset class, but it's not unique to this space, right? Everyone needs to kind of get their heads around their returns, the impact metrics, engaging with kind of stakeholders in the market. So I'll just emphasize, it's not, don't go kind of this journey alone, right? Kind of partner with the right stakeholders. So I think that timeline is pretty critical. And then I think the other lesson is just like the nature of the instrument. Traditional forestry in some cases in developed markets, you can raise debt, long-term debt from pension funds. Folks are kind of looking at that kind of longer term. Within the markets we operate in, think about the pension funds. It's very kind of remote from what they used to, right? They're looking at public equities. They've only started looking at kind of private equity as well as an alternative asset class. And even in that sector, it's quite challenging. The returns are not necessarily as high as you'd expect. So I think the other challenge is just kind of the nature of available capital in the market needs to kind of change with an appreciation that you will get your returns. It may not be in that kind of 5-year, 7-year period, double-digit IRRs, but how do you kind of balance that with the kind of the social impact as well, just to almost kind of blend an attractive return for your outcome, for your investors.
And so listening to you, I want to move into research and academia. A lot needs to change. The entire ecosystem needs to change. Institutional investors need to understand these new asset classes. So moving on to you, Michael, in your work at the African Leadership University, how are you preparing future leaders and even current leaders to support and drive nature-based solutions and investments? Are there any specific programs you're looking at, whether executive, academic-oriented? How are you building capacity in this space?
Yeah, thanks, Dorothy. Yeah, I mean, I think as you alluded, we have always had a focus on nature and business ever since our institution was founded in 2016. So I like to think that we're a little bit ahead of the game because we're firmly seeing a demand for education and professional development in this space. So my role as the manager of the professional development programs is to implement exactly this. And we see that coming from the two different sectors, although in slightly different ways. So many people involved on the ground in this space are traditionally have worked for charities or they're funded by philanthropy or something like that. And that does not, if you've made your career in that space, that's not a mindset that easily translates into a business environment and doing these financial transactions. So there's a huge need amongst early to mid-career environmental people to shift a mindset around what they need to be doing. And I think Adrian's point there earlier on his project was directly relevant. There's a group there that really understand business. Of course, we don't see this very often, to be honest with you. And then on the other side of it, we have a group of financial people who really can't see the value out of this thing that normally just runs on charity and philanthropy. Where's the investment opportunities here? And so, in partnership with FSD, the Nature Executive Fellowship Program is designed exactly to do that, to take 20 senior executives every year through a familiarization program about sustainable finance and the financial opportunities that are, in my opinion, no more attractive anywhere in the world than they are in Africa. This is our strength. This is our wealth. This is our future. We have the last, great herds of mammals left on Earth. We have the last intact rainforests and the last major carbon sequestration environments left on Earth. We are the opportunity. But just having that opportunity is not enough. It needs to be translated from both the project developer side and implementer and supply side, and into something that the demand side understands and will finance and will take risk in order to implement.
And driving now into global policy, the linkage between the GBF, climate policy, and the work that you're doing at Oxford. Nicola.
Well, thank you. And it's
Sorry.
It's a pleasure to be here again. Actually, many of us met here last year, so it's really wonderful to be part of the discussion again. So, first thing I would say is Africa is rich. So, building on your point, Africa has the richest natural capital in the world, in addition to all the other wonderful things about Africa. To solve the climate challenge and the global biodiversity crisis, we cannot, as a world, do it without that richness that Africa holds. So from an international perspective now, the way that I see it, and my background, I'm now at Oxford, but I've formerly been in government in the UK and at the World Bank, so sort of spent a career in international policy. From my perspective, the world needs to be supporting Africa to develop this natural asset. And I think the way that a lot of our systems are set up at the moment, unfortunately, is that all of the incentives are actually to erode that natural asset rather than to protect and grow based on that natural asset. So I think that there is a need for both education in this area, as we've heard, but also to make sure that international systems are set up to support that. So coming onto the Global Biodiversity Framework, for example, that has a number of targets. I won't go into all of them, but targets around having 30% of land protected, conserved for biodiversity, commitments around more finance flowing into this area. But I think fundamentally at the moment, a lot of our systems are not aligned with that, and things need to happen both at a domestic scale, but also at an international scale. So some of the key things, for example, so having worked, particularly in the international sphere, coming into domestically, we need those projects. We've heard about great innovation in projects, but I think we need to be supporting this entire ecosystem. So if you look, for example, at our development finance institutions at the moment, they're only really starting to get into nature at the moment. We need much more emphasis, much more finance going into de-risking this public good that is being provided, and through that de-risking, mobilizing more private finance into this area. So that's absolutely essential. We need also for example, when we're looking at analyzing debt sustainability in Africa, we need to be taking account of that incredibly valuable natural asset that is held by African countries within those sorts of assessments, so that on the basis of that, sovereigns can be accessing more finance from the international markets to invest in this area. So there's a lot of things that need to happen at different scales, and certainly what we would want to see is that the World Bank, Africa Development Bank, other development banks are really, the IMF are really sort of supporting the development of this global public good, which is the natural capital in Africa. And there's a number of things that need to happen on that, but maybe we can come on to that next.
Yeah, and as we look at the second set of questions, I'm happy to open the floor to anyone who has any questions for the team. Any questions so far? Happy to open the floor. Anyone? Good. So please feel free to put up your hand. Oh, there is.
Well, sorry.
Yeah, please go ahead.
Where are you?
Oh, Nicola, yourself.
Well, I was going to. Oh, sorry. Well, I was going to raise a question actually about, is nature actually a new asset class? Because I think, so when we've looked at nature finance, the current finance that's flowing, what you can see is that some of it is new asset classes. So investing in great projects as we've heard about, sort of conservation projects, restoration projects, carbon markets. All of these, I would agree, are new types of assets. But as you said, Paul, actually a lot of this is forestry. A lot of it is sustainable supply chains. A lot of it is sustainable agriculture. So actually, these are asset classes that investors are often used to working with. And certainly from the work that we've done, when you look at the sort of scale of financial flows and where this could really scale up in Africa, but also in other regions, actually mobilizing finance through those existing channels is a really important part of this as well, I think. So, so we've done analysis of looking at 30 of the biggest nature financing funds. Actually, a lot of that is going to sustainable supply chains. I'm sure you've seen that as well in sustainable forestry. So actually, I sort of interested in sort of question, is this so part of it is a new asset class, but actually is some of it actually just doing the existing asset class, but in a more sustainable way?
And Paul? Yeah?
Yeah, no, totally agree with that. And I think it's also kind of that point you mentioned, like in a sustainable way, like people are trying to put their heads around that and also kind of blend what the expectations are around kind of the commercial returns as well, right? Because, maybe they've done it in other markets. Just an example, maybe the US, how do you apply that lens to Kenya, Uganda? What's kind of the timeline, and even kind of the supporting infrastructure around it. In some of these cases, you need to kind of invest in that and build it yourself, whereas elsewhere, that is already kind of in place in terms of off-takers, clients who kind of appreciate that dynamic. So definitely agreed with your point, like it's not necessarily new, but it's like a very kind of different lens that they have to apply to some of these markets we operate in.
Yeah.
Yeah, I'd like to sort of add on to that. I mean, we see a lot of the opportunity in co-locating nature-based solution projects with infrastructure that we just need to have, like a mine. So our company, ESS, well, my company, ESS, which does ESG advisory services, we work a lot with mining, obviously, because mining has lots of money and it has lots of ESG issues. And they have big biodiversity problems, right, often. But mines don't have to be a problem. Like, there is a way to make money from that. So I'll give you an example, a concrete example. In Malawi, we work with a company which is next to a lake, which is Ramsar protected, okay? And when the investors started coming into the market saying we want to invest in this, they're like, oh no, there's this Ramsar lake, we're not used to it. ESG sometimes is a bit of a marketing thing. So yes, mines sound bad, but hang on a second, what's a lake? It's a hole in the ground with water in it. What's a mine? It's a hole in the ground, right? So what's happening here is we can take a lake which is drying up because of climate change, massively, 70,000 people live on this lake, right? And obviously have their pollution and so forth doing it. It has climatic cycles anyway where it dries and fills up. But over time, we have massive pressure. So we can use the mine itself to fix that, but then that can make money, right? Like that rehabilitation, not necessarily all of it can be covered by the cost of the mine's rehabilitation. And there's opportunity to take those machines and make it better. So obviously they're not mining in the lake, right? So we're talking about a wetland near a lake. But if we can retain water around an area, well, that retains the rainfall cycles, that retains lots of different things. The birds come, etc. Otherwise, it goes. People lose their livelihoods. The animals don't come. There's no more fish. Like massive environmental disaster. So we need to take these solutions and co-locate them with mining, agriculture, industry, so that they become the catalyst for that. And that's what Leon Rouge is actually, here in this conference, I've already had multiple conversations with agricultural companies, for example, who are effectively asking us to come and do that for them.
Mm-hmm. And for the, Michael, before you go on, I have a question for the two of you on the biodiversity impact side of it. It's very difficult to measure its long term. And as you're speaking to investors, then how are you able to describe that in a manner that is accurate, transparent, and that can actually build trust? And I want to ask that because, Michael, I know at ALU there's some work you've also done on metrics. So maybe as you ask your question or as you give your comment, then if you could link up the biodiversity metrics side. But yeah.
Me? Or?
Yes, yes. Any of you can answer that.
Yeah, sure. Look, biodiversity. Biodiversity is super measurable. Like, it is measurable. It's really not hard to measure. We do that all the time for many, many projects. So when people go, oh, it's really hard, what it's hard to do is to derive a financial value to biodiversity. That's the hard bit, right?
Yeah.
But it's possible. Everything's possible. So we see that as part of our project, obviously, is the carbon, high integrity part of carbon, is the fact that there's a biodiversity component, which is not all of it. There's the social and communities part too. But still, that's a massive part of it, where we see the value, the added value and the upside for a project of these kinds lies. So I think the answer to that question is that biodiversity is eminently measurable, and we know that there's look, we're on the precipice of biodiversity collapse. Like, this is not a joke, you know what I mean? I'm sad to say it, but like, I drive around Senegal and everyone's like, well, we just keep, concreting here, and like, well, I'll go to my village and see the trees there, and then you go to the village, there's no trees because they chop that down and concrete that too. And so where are these magical trees going to come from, right? And the rest of it's agricultural land. So the trees give the animals a biodiversity. I mean, it's very clear what we need to do is to change that discussion, turn it into something where biodiversity has a value and when you're rewarded for protecting. So I think that's why I would take it.
Yeah. Michael?
Yeah, I mean, to answer the question that Nicola asked about whether nature is a new asset class, it's only an asset class if you treat it like an asset class, and we don't. We treat it as a source of revenue. Whenever you see projects being presented, it's always just about the revenue. It's about the carbon credits, about the tourism. But where does that come from? It comes from an underlying asset. I mean, the example I always use is about pollination. If we can value pollination as a service, fine. But where do those pollinators breed? Where do they overwinter? Where do they lay their eggs? Where do they feed? In a habitat. So why doesn't that habitat have a value as a factory for producers? Why don't we measure quality of habitat and put high value on high quality and low value on low quality? The underlying asset is not being valued here. And I'm not suggesting that's easy, but fundamentally, as a principle, that needs to happen. We don't treat any other business as revenue only when we value it. So it's that underlying asset that needs to be valued. I mean, to answer the question about metrics and biodiversity, Adrian, I agree with you, biodiversity is eminently measurable. But I struggle with the idea that it's comparable across habitats. I'm not seeing a strong case for a credit, for example. I see lots of talk about it from the supply side, because they want the money, right? But from the demand side, we're just not seeing it. And this profusion of metrics that is out there. I think it's a great period because we're experimenting, right? We're trying to get it right. We don't really know what the answer is, so great. Let 20 companies be working on this stuff. But at some point, business is going to say, what am I buying? Am I buying something that's going to be worth nothing in a year's time or 2 years' time because everyone's ideas about its legitimacy have shifted? We've struggled enough with carbon credits, and we all agree on 1 ton of carbon is 1 ton of carbon. There's never been a dispute about that. And that sector has gone up and down and up and down. It's been a very rocky road. Believe me, I've been involved for 15 years. And I've had to get out of the game because it was so bad. I've seen carbon credits drop to, sort of under $1 a ton after the 2008 financial crash. Now we're looking at an instrument where no one agrees on the unit. So not to say that we shouldn't be trying. Let's try everything. Let's have a look at what metrics are going to work, what's possible. But at the end of the day, we need to deliver something the business understands.
Nicola, yeah.
Yeah, we'll just add on the point on metrics and the value of natural capital. So to share some work that we've done that illustrates that value of the natural capital. So we've done work internationally with a network for greening the financial system, with our central bank here in the UK and around the world, to try to value that natural capital in a financial sense. And we find, for example, so if you look not just at the biodiversity, but the ecosystem services, and that's what, biodiversity is important, but those fundamental ecosystem services on which our entire societies are built and grow, water, clean air, pollinators we've heard about. Actually, the loss of those ecosystem services we've shown and they are being massively lost, we've shown can lead to around a 6 to 12% reduction in GDP in the next 10 years. This is a massive risk. So actually, and one of the big challenge that underpins all of this is that when we do an economic activity at the moment, we're not able to take into account that erosion of that natural capital that happens as part of that. So we're not able to value that at the moment, and we're just starting to be able to do that. And I think projects like we've heard today, actually, in addition to the wonderful work on supporting biodiversity, are maintaining natural capital, which countries need to grow upon. So I think actually, if we can not just measure the biodiversity, but say to a mining company, for example, if we give you a mining license here, valuing that potential impact on natural capital and having some mechanism to ensure that they're retaining that natural capital. So in the UK, we have something called biodiversity net gain that we impose, for example, on real estate developers. So same sort of concept, and it's all about valuing that. And I think if you can value that and market that, then actually the entire investment system starts to build that in.
Annette?
No, I know it's a little bit out of my point, but in Uganda we are also having a lot of developments in the mining sector and sustainability, because there needs to be obviously a balance, and also our project is looking at a broader value chain. So I totally agree. We need to look how we can make these activities balanced, and my just 2 cents is that, but it needs to start from a host country. And that's where the challenge is. There needs to be awareness creation, the work together, the partnerships. We need to be open-minded, and we need public-private partnerships for this one to really change. Because also from our Bamboo perspective, yes, we are carbon credit project developers. We are enabling country to have biomass, sustainable biomass. But at the end of the day, bamboo has a huge value chain. It also can be aviation fuel in the end of the day from a biorefinery, if you look at it. Uganda, for example, is importing a lot of paper on an annual basis. It's millions of dollars. Bamboo can create perfect paper. So there's a lot of things happening also in the mining and oil sector, how we are balancing out the nature restoration within their value chain. So there's a lot of work, but the host countries, I see it as a main challenge, because the bureaucracy, not transparency, again, digitalization, these are the issues.
Yep, last words, Paul.
Yeah, just to add to what Annette said, I think that's also the tension you see, right? Like, how do you get public government buy-in? Because they're also kind of thinking about kind of near-term wins in terms of development, tax revenue, and what kind of maybe things they have to kind of defer in the near term to kind of support a lot of these activities. Because, an example is, if a company is kind of looking at, restoring, land, could they kind of get tax benefits from that, right? But that's also a revenue stream that the government will say, like, I'm foregoing that for my near-term needs in other sectors. So, to the earlier point, like, how do you value it? How do you kind of incentivize, not just kind of the government of the day, but also the future governments kind of see that value and also invest in it, knowing that there's kind of near-term pain in terms of revenue, but longer-term society as a whole would benefit.
So ladies and gentlemen, there you have it. The opportunities are clear. The risks, of course, are what you've spoken about quite a lot. But there's a lot that is already being done. And I'd like to ask Kelvin, our Director, Risk and Resilience, to come and give some final words, some final reflections before we close off the panel.
Thanks very much, Dorothy, and thanks a lot to the excellent panel. I think you'll agree that we've just heard some outstanding insights from all of them. And I think the thing I'd like to close with and emphasize is that this is a particularly positive story for Africa. We have this abundant natural capital, and by preserving and restoring it, we have this opportunity to increase livelihoods, to create jobs and better income. And there's also a very important climate adaptation and mitigation story that nature-based solutions provide. And the exciting thing, the really positive thing that we're starting to see now is that there's opportunity for private investment here. There's an asset class, there's revenue streams, both the traditional revenue streams, like you see in commodity spaces, like with forestry or agriculture, but also these new revenue streams like carbon, that create an investable opportunity for the private sector. So I think that's particularly exciting. In our work as African Natural Capital Alliance, we've seen a real dramatic shift actually in the last 3 years. When we started to talk to mainstream financial institutions, financiers about this, even DFIs, it was a very new concept, and there wasn't really a recognition that this could be investable. It was more seen as kind of in the public space, as conservation, as protected areas. But that's dramatically changing, and we're seeing real interest, especially from domestic local capital in Africa, that's willing to come to allocate their balance sheets to this, as well as from the DFIs. And Nicola, your point is very valid. That also needs to happen. And so I think we're on the cusp of an emerging kind of asset class, and seeing kind of these benefits extracted for Africa. And so as FSD Africa, even by ourselves, we have a portfolio pipeline of around 45 nature-based solution projects, which represent about $1 billion worth of investment opportunity across the continent. And you've heard just from two of them this morning that are outstanding opportunities. And so we're really hoping that this momentum will continue to grow as we work together as an ecosystem. So thank you very much for being here today, and please feel free to stay and have conversations with any of the panelists or ourselves. Thanks a lot.